Just loading it up, and then we are off to the races. Another beautiful Friday for you to be hanging out in the backyard, having a chat with me about trading.
Oh man, Kev, you know it's a little nippy today, man.
Yeah, you got a sweater on and everything.
Yeah, it just can't say no to the sun.
Until it burns you.
Exactly. I need to get some color though, man. I mean, like last week, you wouldn't know if I was wearing a shirt or if this was my actual skin.
Nice, man. That's so funny.
Mm-hmm.
Here, I'm just sharing the links around quick.
Yeah. Market is on fire.
Isn't that crazy? What's the S&P up right now?
I think it was up 85 when I took a look. I mean, Dow was up 750, I think, at the highs. It's after that huge move down yesterday, 17 down yesterday, closing on the lows.
Nuts.
It's a massive,
absolutely
massive rip
nuts.
to the upside.
What do you? That's just the. Do you think that's after hours? The Fed coming in and just buying up everything.
The money printer going burp.
The money printer going off, dude.
Dude, I actually can't say it in real life. Can you say it? Is that it?
You know the sound of like when you put the money in like a money counter? It's like
yeah. That's
the noise that they go for.
That's the Fed.
See, I can see the big money coming in. I just have to jump in front of them. Right? I should have bought the dip yesterday. By the way, that is not advice to go buy the dip if the market crashes. Don't do it.
You know what was pretty wild, man, is airline was down 15% yesterday, and now some of them are up 20% today.
It's crazy, dude. Honestly, this can't be sustainable.
No, it's definitely not sustainable. The vol has to drop from here. Especially in the airlines. I mean, 20% days.
Like, what the hell's going on?
How long is that going to last?
Right? Imagine we're sitting here a year from now and it's still just like shooting all over the place.
Yeah. It's pretty brutal.
So, yeah, today, guys, we wanted to have a chat about trading in general. We wanted to have a general chat about trading because, look, in the end of the day, we've had a good run so far, right? We're 7-8 years into our trading journey. 5 years ago, a lot of things changed. A lot of things changed 5 years ago. Got more serious about it, got serious about numbers, and everything got better from there. We're at a point now where, about $1 million in capital raised, 70% year-over-year returns, winning the biggest options competition in Canada. We want to share what the hell that journey looked like for us so that everyone here can at least have an idea of what it really takes to win in this game. A lot of people sit here and they think to themselves that, that if they master themselves, they're going to become the trader that beats the world. But that's like thinking that if you had great psychology, you'd be a rocket scientist. And it's just not the reality of the game, right? Like, Jordan, what do you think about this, man? Like, it's like every trader comes to like a fork in the road eventually, right? And it's a weird one where like you look at the professional world and you see that everyone is data driven. Mm-hmm. See, everyone's doing math. You're like, this looks hard. And then you see another path, which is where all like the mentors and everyone which is like, learn to master yourself, learn the patterns, see the future, jump in front of the guys doing the math. And it just sounds like a more doable road. And like, because we're all pattern recognizing creatures, we look at that and we go,
oh yeah,
that makes sense to me.
Mm-hmm.
That makes sense to me. So we choose to go this path of self-mastery and pattern recognition. But what people don't realize is that path goes in a circle. It never actually gets you to your destination. You just go in a circle, constantly thinking you're the problem, getting frustrated, becoming just a sour person, losing money, making money, losing money, making money, losing money, but always on a downward trajectory because you never know if you're actually supposed to win. Meanwhile, the other road is a lot choppier. You got to learn shit that you've never even thought of. It's not fun. It's a grind, but you actually get to that goal of profitability. You actually get there in the end of the day.
Yeah.
You know what I mean? What do you think about that, Jordan?
I think it's a really important question to ask. I mean, a lot of the times you'll see traders go on a hot run. They hit 5 trades in a row. Their account's up 1,000%. They're betting it all on the line every trade, right? You need to ask yourself, how is my account done over a year? How have I done over a year? okay, how much have I put into this? How much have I gotten back? And what we find usually is that over that long period, not a lot of people win at this game, right? And you can even
That's
think
just
about
one
it.
year.
That's just 1 year. Yeah, if you stretch that out, the numbers even become worse unless you're buy and hold investor. And even then, I mean, I remember buying the Nasdaq in 1999. It took 25 years to recover. So um, we really need to look at trading from a long-term perspective, and it can be frustrating. Like when Sean said there's two forks in the road, I was actually thinking there's two forks in the road where it was like, do I continue or do I give up? Because
Wow.
going through that route, you get there eventually. When you feel like you're almost around the corner, but you actually don't make the corner, you eventually get to a point in your life where you say, do I continue this or do I not?
Mm-hmm.
And a lot of the time, it actually comes down to a gambling addiction, believe it or not, man.
Yeah, no, like look, a lot of the people that like this is the thing, guys. Like a lot of times we do this, we do it for the one guy that this is gonna resonate with, and he goes, you know what? Fuck, I have been bullshitting myself. I'm lying. I know I'm gambling. I know I don't have an edge. What the fuck can I do to change? Right? And that's the person that I'm more than happy to help anytime. But you know what I thought about, Jordan? Like, a lot of people use psychology and they're like, oh, master your psychology and stuff, and like that's really what matters. Don't worry about the other stuff. But when you think about it, Jordan, like even if you look at a field like psychology, imagine if in psychology they didn't use data.
Right. Imagine
Like,
that.
there's not name a single field that you would consider modern in any way, shape, or form that isn't data driven. Imagine if your psychologist came up to you and said, and you were having a bad day, and he looked at you and went, "I've seen this one before. You're just an asshole."
Yeah.
You know what I mean? Like, you'd be like, "What the fuck, man? I have severe depression. What are you talking?" He's like, "No. I saw this one last week. Buddy came in, said the exact same thing when he walked in. Same look on his face.
Yeah, same look, same shirt.
Same shirt. Asshole." You'd be like, "Dude, you're a psychologist?" He's like, "Man, I can see the patterns."
Mm-hmm.
You'd be like, "This guy's a clown. This guy's a clown. So why the hell is it any different anywhere else? Why would we take that same logic and not apply it to trading?"
Mm-hmm.
Right? Now, if he said, if the guy came in and said, "You know what? I've done this. I've looked at the research with the way that you communicate, the way that you do stuff. We've seen this over thousands and thousands and thousands of cases over 50 years. You're just an asshole, man. Just accept it." Maybe I'd start to believe him. You know what I mean?
Yeah. Sean, did you ever see that guy? He was a weatherman, and he started drawing Fibonacci patterns on the Weather Channel.
No, he didn't.
No, of course not. You know what I mean? Like, but,
okay.
But imagine that was the case. Imagine like you turned on your Weather Channel, and he's got like the 20, like the historical 20 days of temperature, and then all of a sudden he just draws a Fibonacci line on it. It's like, you know what? We're seeing a little breakout here. We're probably gonna hit 30 degrees tomorrow. Do you know what I mean?
Oh man, I actually believed you for a second there. I was like, no way.
Yeah, it's like if you heard of that, you'd be like, what the hell?
Yeah, you'd be like, this is a joke.
Right?
This has no, we're breaking out. We're getting rain tomorrow. Are you gonna go bring your umbrella on a walk with you, even if it's sunny out?
Exactly. I mean, it's really important that we, when we're trading, we really decide on, who to listen to and, where to get some good information. So like that's why we always say, go look at who the biggest 20 hedge funds are. Start there, see what they're doing. D.E. Shaw, Renaissance, right? These guys, they're all quant driven, they're all data driven. They spend millions of dollars on data. 0.72, Cubist. Right? These guys are spending millions of dollars on data. I think even Ray Dalio said, at my firm, I spent like 10 million last year just on data.
I think it was more than that, man. I think it was like 50 million. You spent a lot of money on data.
Yeah. It's because taking that information, giving it to a smart individual who can process it and understand what's going on, they can make better decisions. It's like, well, why would they do that if they can just follow a trend line? If they can just see resistance and support? If all they need is trading view?
Well, okay. Well, what I'll say to you, Jordan, I'll play devil's advocate here, is they're playing with so much capital that they're too big to follow a trend line.
too big to follow a trend line. I mean, all that matters is the liquidity of the instrument. So if the instrument's liquid, trend line's a trend line. You can get in, you can get out, right?
Yeah, like Forex.
Like that's the most liquid market in the world. And it was so funny. I was looking at I was talking to one of the guys who used to trade Forex professionally for PIMCO back in the day. And he's saying like vol's 4% on Forex. You know, there's no money when volatility is only 4%. You know, back in the day, you see, you know, huge swings. But nowadays it's I mean, like, well, actually right now I was looking at USD CAD.
Got smoked.
Yeah, it's around 13% volatility. So it looks like volatility is coming back into the market. But you know, prior to this down move, it was just like 4% volatility for months.
Disgusting.
You know what I mean? Yeah.
It's like it's that efficient.
Exactly.
That's crazy, man. You know, I want to make something clear for everyone here. Like, you know, a lot of the guys here, they've been talking to us for a while, so they know. What's up, Raph? What's up, Anthony, by the way? Good to see you guys here on a Friday morning.
Nice.
Anthony, I would have thought you would have been hungover right now, man. Partying up with the fam. But
I thought you were saying he was in the Discord last night. That's why.
Oh no. I don't know if he was, man. I don't know. But so when we say use data, like I'm not talking about some crazy machine learning AI fucking supercomputer overlord that sees everything and can predict the future. I'm not talking about that. Literally all I am saying is put some fucking numbers to your idea. Put some numbers to your ideas. Don't sit there and have faith that something's going to work because some guy down the road told you it was going to work or because you saw a pattern. Now you're the guy who said, you know, now you're the fucking psychologist I talked about who sees blue shirt, dude. I can diagnose you right now. Asshole. I've seen this pattern before. Blue shirt on the first appointment. It always leads to a breakout. You know, you don't want to be that guy because what you realize year 2 or 3 of your trading journey, what you're going to realize is that everybody, the 90% of people losing money are doing exactly that. There's nobody out here who's just like who's consciously going like this and throwing darts at the board. They all think they're throwing darts well. Everybody thinks they're throwing darts well. Nobody's out here trying to lose. Nobody is giving you free money. So who the hell is losing? Is it the guy with the PhD in math, with the quantitative background, working at the fund, making $5 million a year managing money? Is that whose money you're taking? Wake up. We all need to wake up here. I'm not claiming anything crazy, I don't think. I'm not sitting here saying, if you don't have a PhD in math, trading's not for you. I'm saying fucking learn to put some numbers to your idea. Learn to think critically about things. You know, anyone who comes from a math background of any sort knows or statistics or research or anything in an analyst position, take what you do at your job and apply it to trading. Don't think that they're two mutually exclusive things because they're not. The same skills that these professionals use to trade, we can use. And if the average trader learns to take advantage of them, they will be doing fucking amazing because they can take those skills that professionals use and use it in areas where the professionals can't go because they're too damn big. A professional can't go and trade volatility on a small cap stock. A professional can't go and short vol around an earnings event. They can't do things like this because of their risk tolerance and their size. So when we learn those skills and we take them and use them in areas they can't go, we become the big fish. We eat all the little fish. That's who you want to be as a trader. We need to wake up, guys. This is the reality of the game. Once we learn to put numbers to ideas, we at least find out if we're right or wrong. Are we supposed to win? Are we supposed to lose? Take coding for 2 months, or for the guys in the group, we can run a little test. Give me your favorite, anyone in this right now, send me an email. I'm going to type my email in at the end of the chat. Send me your absolute favorite pattern to trade. Your favorite pattern to trade, the one that you've seen make money time and time again. I'm going to send you my email. I'm going to put it in the DM. Send me it, but it's got to be defined. Buy when it crosses this line, sell when it crosses this. Buy when this, sell when this. It's got to be defined. And I will actually go and back test that for you. and I don't know what the result's going to be. I know if it's some like RSI strategy on the S&P, I know you're not making money. I can tell you that right now. But let's give it a shot, because I'm willing to do that for you guys so you can wake up to see the reality of what is going on in this game.
Yep. I love it. I love it, man. They got honestly, it's if you're out there, this is for the one guy that's out there that's really grinding it out, and he's not able to overcome, his fees and his transaction costs, and he's going on a downward trajectory. You got to start putting numbers behind your theory.
Dude, I feel for that guy.
Yeah, I was there, man.
I feel for that guy.
I'm gonna have to get my certificate out, because I took the technician from the Canadian Securities Institute, basically the CMT for Canada. I was there, like grinding it out day after day. Tried it all. Elliott wave. I did point figure 2, point and figure. Candlesticks, all that good stuff.
There's just no predictive power.
There's no predictive power.
Right?
Yeah.
It's like it's like looking at the sheet that has like at the horse racing that has like all the different horses that are running in each race, and being like, oh, whenever I see one that has a lot of wins, that's the one. That's the one. As long as I always pick the guy with the most wins, I win.
Mm-hmm.
It's like,
I would actually say if you go to Bill Bendtner, so Bill Bendtner made $1 billion off horse racing, and see what he did, right? He actually used a whole bunch of modeling to see, okay, well, which horse is going to win, and that's actually how you win in this game, right? You look at who your competition is. So in his case, it was a lot of it was just he was in the Hong Kong racetracks. A lot of it was just Asian gamblers, right? The people at the Hong Kong racetracks who love to gamble, and so he said, well, these are the people on the other side of my trade. What are they doing that I can beat them at? And so he said, well, none of them are statistical modeling, so maybe I can do that. And so he did it, and he made $1 billion. And that's the same thing in trading. If everyone is looking at some Fibonacci line or trend line, you know where everyone's getting, and you know where everyone's losing. Getting out.
If everyone's doing that, who's losing? Especially in a game. Remember this, guys. We're in a game where one big fish can eat all the little fish. So one guy with $1 million can take everybody trading with $1,000 accounts money. So it's not a balanced game in that sense. So if you look out at the market and you see that every single small fish, everyone with an account under $250,000 is using technical analysis. What are the odds that they're all the people losing in the long run? What are the odds? The odds are, in my opinion, 99%. Almost the exact ratio of the people losing money in options. Right? And I'm not saying if you use math, you're going to make a ton of money. I'm saying it's your best shot. Right? Without that, you've already set yourself up to lose. So we need to have that before we even start playing this game. We need to be using that continuously throughout the game.
Yeah. And I remember a professional trader told me, like, knowing that stuff doesn't give you an edge. It just allows you to play in the game.
Exactly. It's like entry fee.
Yeah.
It's entry fee these days. And it's because people don't realize this, that they are fucking gambling. It is the world's biggest casino. Nobody wants to talk about this shit because everybody who's in the spotlight is making money off of you being in the casino. But like I'm telling you from my own experience, from everyone I've seen, if you can't put numbers behind your idea, you are throwing darts like this. You are doing this. And it doesn't feel like it because this is the hard part, Jordan. It's like, it always feels like you're learning. It always feels like you're getting better. It always feels like you're right around the corner from profitability. But all you're doing is learning different ways to throw darts with your eyes shut. And that's why it always feels good because it's like, I understood it. It made sense. I can apply it. I understood it. It made sense. I can apply it. But did any of it give me an edge? No. None of it gave me an edge. And it took me 3 years to realize this. It took Jordan 3 or 4 years to realize this. He wrote the fucking professional technical analysis course. And by the way, this is not hate on technical analysis. This is hate on subjectivity. If you can find a pattern and test it and prove that following this makes money in the long run, do it. But what you'll also find is when you get to the point where you can test an idea like that and do it, there's other things you're going to be adding to it beyond just the pattern. So it'll never just be the pattern.
Exactly.
You're either following it blindly, or you have the skills or the resources or the education to take it even further than that.
Yeah. I was just talking to a PM yesterday, and he was saying he wanted me to help him back test. There was a strategy where if VIX goes up and S&P go up in the same day, buy the S&P, hold for 5 days. Can we test that for 20 years? Right? And that's exactly how, a lot of us should be looking at trading.
Right? And
here's an idea.
Especially
test
in the
it.
option
Does it work?
space. Yeah, it's a little harder to do that in the option space. But
definitely.
But what we do in options is we look for factors that tell us things about the market. So we kind of do a signal kind of thing. We look at the data, but it's like the data is like basically giving you insight into the psychology of the market. Rather than having to guess at it, you can look at it and go, okay, like where is their demand? Where is their supply? What is the market implying is going to happen in the future versus what am I forecasting to happen in the future? And we take all of these different factors. What does the term structure look like?
Yeah.
Right? We take all of these factors into consideration to paint a picture of what the future might look like.
Sean, is there any questions? Because I got to run at 10:55 today.
No, there isn't any questions right now. Do you guys have any questions for us? Sorry, I've just kind of been yelling, This isn't a personal attack, by the way. This comes from a place of like, I swear to God, guys, like it might sound like it because it does frustrate me, but it comes from a place of like, of caring about this, man. Like I really, really want people like, look, for the guy that wants to get rich in fucking 2 months and he doesn't actually like trading, I don't care. I have no empathy for that guy, but I have a fucking boatload of empathy for the guy who's working his ass off at this, who's sacrificing his social life, who's staying in his room all night doing it, looking at charts during the workday, trying to figure it out, putting his all into it, paying for mentorships that aren't teaching him shit. That's the guy that I do these rants for. And only 10% of those guys are going to fucking hear it because the other guys haven't been doing it long enough yet to really appreciate this message.
Yeah.
Don't Run's asking, can you, he missed the beginning. Can you give an example? And Kyle, it's personal for me. I know from talking to you, it's personal for you. I just hope that people don't think I'm just yelling for the sake of yelling. But Don't Run's asking, can you give an example of like what you guys are talking about? So let's go. I'll give the psychology example again, and then you can give the weatherman one. All right.
Okay.
So Kyle, so Don't Run. Here's an example, man. Basically, every single professional field that you have respect for that you would consider modern uses data. Even psychology itself, the field that we claim to be using to get better at trading, that is literally data driven. Like, could you imagine if you walked into a psychologist's office and you talk for 2 minutes, he goes, no, stop there. I've got the answer. I saw a guy last week just like you, same shirt, he said the same 3 words when he walked in. I already know how the rest of this conversation is going to go. I can forecast him. You're an asshole. That's my diagnosis. You're an asshole. So get out there and just be a nicer guy. You'd be like, I just paid $100 for this session. You're a joke. Right? Or imagine if the weatherman who comes out and starts drawing Fibonacci lines on the 20-day forecast.
You'd be like, what the hell is this?
You'd be like, are you joking? You're like, come on, man. Are you gonna fall? Okay, more importantly than how funny that would be, are you gonna follow that advice? Are you gonna wear your rubber boots and your raincoat and bring your umbrella? You're gonna be the one. You're like, no, we're not gonna follow that advice. It's bad advice because it's not founded in any sort of reality.
Yeah.
Right. There's no numbers behind it. Okay, we got a good question here. Pranav is asking, any advice on actually developing a strategy? So let's answer this and then we're gonna wrap it up, guys.
Yeah. So the way that you would develop you before you even backtest or anything, you try to pinpoint an inefficiency. So for example, Pranav, how we sell earnings around sell volatility around earnings. Our idea is volatility is going to be overpriced usually going into an event because people need to hedge their positions around these large moves. So that's our idea. And then we go and we test it. So it's not like we're going to say, let's go and test this RSI indicator just because, right? We have to have an idea of what inefficiency we're taking advantage of. Okay, so say, for example, you're a market maker, and you're saying, well, this idea that there's no liquidity in the market, can I come in here, provide a tighter bid and ask spread? How will I do over time? Right? You have to start with an idea, something that you want to take advantage of. Then you go in there, you test it, you try to make it even better, you twist it, you move it around until you get an optimal strategy that crushes the market. And then obviously, so a few ways you can do that. You can either learn some coding to test it yourself, or you can have a really deep understanding. There's a lot of research papers that actually do the back tests for you. So you can read research papers, and as long as you have a deep understanding about why this should work, you'll make money. Sean, I got to run here, big guy.
Yeah, it's time.
Yeah.
Okay, guys, make sure to subscribe.
Okay,
please, if you enjoyed this talk, support what we're doing here. I want to bring this message to every freaking trader. So at least the ones that are willing to do something about hearing it, at least get the message. So thanks a lot, everyone. And we'll be back at it on Monday morning, 10:30 a.m., same time, more rants, or at least some stock breakdowns or something.
Yeah.
Take it easy, guys.